I know we don't trade with indicators, but today I'm going to show you how we trade with a RSI, the Relative Strength Index. And the reason I want to show you the Relative Strength Index, and the reason I want to get to the Relative Strength Index, and why I'm going to show you an indicator today, is because it's one of the oldest indicators known to mankind, probably developed back in the day when they were building pyramids or something like that. And the Relative Strength Index gives you a lot of confidence on your trading. Now, sometimes when you're trading without the indicators and you're looking at your price action system and you're thinking, should I go up? Should I go down? Maybe sometimes it's a good idea just to put an indicator on the background and just see if it sort of applies to what you actually want to do. It helps. It gives you a little bit of an idea of where you're going. And in the last 33 years that I've been trading, I have found myself going back to systems like this. One of the big things with the Relative Strength Index, the RSI, we'll call it the RSI. You all know what it is, right? And I'm going to abbreviate it from now on in this video. So the RSI, and one of the main reasons we use the RSI as well is because many of the pros, the big money traders, actually use RSI, and it's all they use. They don't use anything else. So you can actually simply trade with the RSI if you want to on its own. You don't even need to use anything else. But of course, we use price action, we use support and resistance, supply and demand, that sort of thing. So I add it in from time to time, and I am going to do a range of videos on these different indicators for you. So it's good for you to know what indicators to use at what time if you want to use them. So if you want to, let's say, have a tiny little chart and a giant RSI indicator on the bottom of your chart taking up most of the space, then perhaps you want to put this on. What I do when I use the RSI is I'll have a look at the chart, and if I need to put an RSI on and just have a look at where the market's going, if it's overbought, if it's oversold, whatever the case, what I'll do is I'll put it on for a couple of minutes and just see where it is and use it according to that. Many of you will use MACD, stochastics. Many of you will use other systems like Fibonacci, things like that. And I will go into detail on those indicators at another time, sometime in the future. But for today, we're just going to talk RSI. And then after I've shown you how to use the RSI on the charts, then I'm going to take you and I'm going to talk to you about the strategy and how we make money in the markets. What you've got to understand is that charts are 50-50. Charts can't predict the future, you can't predict the future, and there's nobody that can actually time the market. You can't time the market. You can have time in the market, but nobody can actually time the market. And if that's the case, then how do you actually make money in the markets? And this is the question that's always arisen, and I have an answer to that. You've got to separate the system, which is the charts, from the strategy, which is something completely different. There are many different systems that you can use. You can use price action, you can use ICT, you can use the open range breakout strategy, you can use all kinds of different strategies to trade with, but can you make money with them? And that's always the question, because a win rate doesn't actually make you money. Hey guys, before we go any further, I'm Rob. For those of you who don't know me, and for those of you who do know me, I am still Rob, and it's Coffee with Rob. Let's go to the charts, and let's go and have a look on the charts and how you can trade with RSI. And then I'll take you to the strategy and show you how you can be profitable straight off to the charts. Here's the charts, guys. So here we are on the charts. I'm just going to, let's say, choose the S&P. Let's take the S&P as a good example, and we'll work from there. Here's an S&P trade, and you're looking at this and you're thinking, should I go long or should I go short? Should I do anything on this trade? Because what you've got here is you've got this ascending triangle, you've got this like resistance at the top, you've got this trend support along the bottom, and you're thinking, well, it's come down, it's broken back through that resistance, and it's gone down into this level, it's taken the level on the support, it's got all the way back up again. Now it's at the resistance again. What am I going to do? Am I going to go short here? There's a green candle. If it breaks through to the upside, it's going to go long. What's happening here? So that's when price action becomes a little bit iffy. You're not quite 100% sure if you want to take this trade or not. And in all likelihood, I'll probably leave this trade alone and come back at a later stage. But it's here, so let's have a look. All you do is you go to indicators. Every single charting package on the planet will have a thing called indicators because it's an indicator thing. Most of these packages advertise their packages to you based on the amount of indicators that they've got, which we don't use anyway. But if you want to use one, here we go. And as you can see, there's about 40 million different indicators that you can use if you want to, but we're just going to use the RSI. I'll type in RSI because they understand the abbreviation. Look at the yellow letters, RSI, Relative Strength Index. The explanation is in the name. It's relative strength, right? Now, what you get is the standard settings. Somebody asked me if I change the settings on the RSI. Now, I might change the settings on a stochastic, but not on an RSI. Bearing in mind, guys, that I don't trade with indicators, let's have a look at the RSI. What you'll find is there's a 70 and a 30 level. What that is, when it hits the 70, it's way overbought, and when it hits the 30, it's way oversold. And in some cases, you'll see that it breaks through that level on both sides. When it breaks through that level, that's your first signal. If it's broken through the 70 and it's hovering up at the top there, what a lot of pro traders will do, they won't draw any lines in, they won't do anything. They're just going to go sell. And if it breaks through the bottom of the 30 and it goes into these lower levels, a lot of pro traders will just go buy. The trouble is it can sit in that buy for a very, very, very long time. It can keep on selling. It can keep on going down while it's in that level. So it's not really a clear indicator. So I'm going to show you a little trick as to how you can get into a trade based on these levels. And the simplest way is this. So if you were at this level here and you were looking at this on your charts and thinking, should I buy or should I sell? And you're thinking, I'm not 100% sure. I'm not sure what I want to do. And you see how long it sat in this level before it actually sold? You know, it can sit in that level for quite a while before it actually gives you an indication that it is going to sell. So what you do is you take the trend line, you take it at a point over there, and you simply draw it through the RSI. Get a couple of points, and there you go. 1, 2, there's your third point when it hits. When it breaks through that trend, when it breaks down through that, which would be around about that level there, and it's not perfect because you can see it's still trundled along for a while, and it even went up a little bit. But when it breaks through that, that's when you sell. That's when you're looking to sell this particular product, and then you did get the sell straight after that. The other way to look at it is if you want to buy. It's come all the way down here, it's oversold, and you're looking to buy it. And this is why I don't use RSI as a trading system. It's because it's not perfect like anything else, but it does give you a very good indication. And I'm going to talk to you about that now as to why you need to use it and what a good thing it is to give you confidence in your trade. But let's say you want to actually buy this because it's oversold. So you don't just buy it here because it might sit for a while before it goes up. In this case, it didn't. It went up quite quickly, but in many cases it doesn't. So what you do, once again, just put a trend line in there and say, I want to buy it. And there you go. You've got 1, 2, 3, 4 points. And then it comes up here, breaks through there, and you've got the buy. And look at that. It went all the way up to the top there. And then similar situation when it comes to the sell. Once again, you might want to sell it when it's at the top here. You're not 100% sure. Look how long it sat on the RSI at the top here before it actually broke to the downside. So what you want to do is you want to draw that line in here again, line across there. So effectively, you're going to draw a trend line in from the bottom across the top bottom here. Once it breaks through there, then you're looking at a sell trade all the way back down to the bottom again. And that's how you can use the RSI in a simple way to actually get yourself a profit. If you don't want to draw the trend lines in, if you don't feel like the trend line is going to work for you and that's going to be the answer, you can also, if it breaks out of the level, as you can see over here, it breaks out of the level. When it breaks back into the level, that's another good time to look at the sell here. In this case, when it breaks out of the level, it breaks back into the level, back through the 30. It's another good time to maybe look at buying again. This works very well, particularly in ranges. When it's in a trend, sometimes it sits for a very long time at one side of the level. But it's very handy for just getting a picture of where you want to be in the market. So for example, you're looking at the S&P now and thinking, should I go long or should I go short or should I do anything at all? Now the RSI hasn't broken through either level except here at the bottom. There was a bottom here and it went long. So it's gone long all the way up to here. It might still keep on going long, but what I'm looking at here is if I take a trend and I draw it in there, there's a very good chance that this could still go long. It hasn't broken anything as we stand at the moment. You could look at that and say it's broken that and it's gone short, but if you look at it from a different perspective, you've got this and it's really just sitting on the support. So what I would do with this particular trade, because the RSI isn't giving me a strong reading, the chart isn't giving me the strongest reading, I'm not 100% sure. So you know what the best thing to do with that is in trading? Leave it alone, walk away, let it carry on by itself, let it move along by itself. Don't get too caught up in all the rubbish. Don't trade in the middle. Let it give you a clear signal to the upside or the downside. Now, I don't recommend ever trading with these indicators lying at the bottom of your chart. You see how much space they take up. They make that chart a lot smaller. And then if you go and put these things in on the side, then it becomes even smaller. Then you end up with a tiny little chart. And that's why I don't like using indicators in the first place. And I leave them off my charts. I don't use them. But they are handy if you just want to come back and you just want to have a look and you just want to see, should I take that trade or shouldn't I? One of the big things is, but how do you make money? How do you strategize if the charts can't predict the future and if the charts don't exactly know where the money's coming from? What do you do then? Let's go and talk about that. The big thing in the markets is to understand that the market's 50-50. In all likelihood, you're probably going to lose more trades than you win. It's a sad fact. It is what it is. That's what's going to happen. Good coffee, that. Always good coffee. Keeps you going through the day, doesn't it? But here's the sad fact. The fact is you are going to lose more trades than what you win. And a lot of you will turn around to me and say, but Rob, how am I going to make money if I'm going to lose more trades than I'm going to win? How am I going to actually make any money at all if I'm going to lose more trades? And this is really simple. And this is the point of the market. And the aha moment came to me many, many years ago when somebody said to me, Rob, it's not about timing the market. Nobody can actually time the market, but you can have time in the market. And I thought, but I don't have time to sit in the market and wait for 100 years to make a profit, which I do, by the way. I do have an investment account where I do sit and wait for a profit to come about, which it does. It always does. Time in the market always works. But here's the thing. How can I make that work on trading? How can I make that work on day trading even, for that matter? How can I make a profit by knowing that I can't time the market? If I can't time the market, then what's the point of me throwing money at a chart and saying, well, it's going to go in my favor, I'm going to have a win rate, I'm going to make a profit, if I don't know that I'm going to make a profit because I now know that the market's now 50-50. In fact, I'm going to lose more than I'm going to win. Look, trading's risky. We all know trading's risky. Here's the problem, guys. 70% of traders actually lose money. Now, if 70% of traders are losing money, that means you are actually assuming that you're going to be part of the 30% by actually trading, because you all trade to win, don't you? You don't come into trade to lose. Now that becomes an issue all by itself, because now we're all thinking, well, we're going to be part of the 30%. Who are those 70% of people that are losing? Losers. Yeah, let's forget about them. Let's just think about ourselves, the 30% that are going to win. That's human nature to think this way. Did you know that in day trading, in the 5-minute charts, 99% of traders actually lose money? And that's an insane figure. Now we all think we're going to be part of the 1%. It's actually going to win in the markets. Do we actually think that? Well, there is a way around this, and there is a strategy to get around this. And my strategy is simple, and it's this. All you got to do is take an account. Let's say it's a $25,000 account. I'm just using that as an example. And what I like to do is split my accounts up so that I'm not trusting any one particular broker, one particular account, putting all my eggs in one basket, let's say. But let's say you have a $25,000 account. The first thing you've got to do is make sure the account size stays the same. So if you make a profit, take money out. Don't leave the money in there and try and make the account bigger. If you want the account to become bigger, if you want the account to grow, then make a conscious decision that this is now no longer a $25,000 account. This is now a $30,000 account, and work off that basis. But don't work off the basis of I'm growing the account and then it just gets bigger and bigger and bigger and bigger, and then you keep changing the amounts. Decide on the size of the account. Even if you leave the money in the account, that's entirely up to you. Decide on the size of the account you're trading. So even if it's showing $30,000, work on the basis of a $25,000 account until you consciously change that figure. Now, it's a $25,000 account. What I do is I risk 1% on every single trade. And you're going to say to me, Rob, but that's only $250. You are correct. It's only $250. But if I lose 10 trades in a row, it's $2,500. And guess what? I haven't lost my account, where you have. If you've traded 10% stop loss, for example, you can choose whatever you want on the stop loss. You can choose 5%, 10%, 2%, 0.5%, 1%. I prefer 1%. That doesn't matter. What matters is that you keep the risk the same on every single trade. No matter how confident or how non-confident you feel in any particular trade, or how good you feel about any particular trade, you've got to keep that percentage the same on every single trade. So if you're risking $250 per trade, you risk $250 per trade. That's it. End of story. You don't risk 100 on the one and 400 on the other, because then guess what? Your strategy's not going to work. You in all likelihood are going to probably lose more than you win. And the idea here is to win more than you lose. And that's the point of having a risk strategy, that where the risk remains the same on every single trade. That's why we do it, so that we can actually win more on the wins and lose less on the losses. And that's what you've got to keep in mind. So keep the risk the same on every single trade until you consciously decide that you want to change that in any way, shape, or form. Now what you do is you go in, you look for where you want to put your stop loss. So, the important thing is to find an invalidation area. I see so many people going into the market and looking for areas of stop loss, looking for areas of where they would look at it and say, this is where I want to put my tight stop loss, fast stop loss, that type of thing. No, you don't want to do that, guys. You don't want to do that at all. What you want to do is have a stop loss that is an invalidation area. Let's go to the charts quickly and I'll show you. Here we are back on the charts again. Just going to take this down. Let's have a look for an area. Let's say we've got this trade here, and then this trade is actually in a loss. Okay, so we've taken the trade, but what we've said here, our loss is $250 on this trade. Guys, it doesn't have to be exactly 250. It can be 260, 270, 230, just as long as it's close. That's all you want, right? So this is a 250, and then what you do is you say, I'm prepared to lose that 250 or get out early or whatever the case. You want to cut your losses as early as you possibly can. But what I'm saying here is, I want my stop loss at this area, because clearly if the price gets to this level, then in my opinion, not yours, not anybody else's, not somebody else's opinion, my opinion, the trade is invalid. So I put my stop loss there, and then all I'm doing is working out what size my trade is back to my cost and how many contracts I can take back to my cost. And then I'm taking my trade. Let me show you on another trade so that you get a better idea of this. Let's say you wanted to take a long trade on this United States dollar, Canadian dollar. All I would do is click buy. And then on the buy, I would say, well, my stop loss would be down here at 136.97, 1.3697. So I would type my stop loss in here, 1.3697. And then I would say, how much is my stop loss on 0.4 lots? It's 358. It's too much. I'm going to make it 0.3 and see what that says. And that says what? Put this in and say 1.3693, 184. Let's say 0.3 again. Let's try that again. 0.3. I'm going to put it in here, 0.3, and see if that gives me the level I'm looking for. 0.3, 276, close enough. There's your stop loss. So your stop loss is at 136.93. Then you know exactly where your stop loss is. Then you can just make sure that your take profit is giving you a good risk to reward. Let's go back and talk about this. So there you go, guys. That's all you got to do. Now you've found your stop loss. You found the size of your trade. All you do is look for the size of your trade. That's it. End of story. Nothing else. Once you've found the size of your trade, it really becomes quite simple, quite straightforward. Now you know the size of your trade. You know your take profit. It's important to know where your take profit is going to be, how far away it's going to be, because you want your profit to be more than your loss. You don't want to sit with a situation where you're risking $250 for a $50 profit. That's insanity all by itself. So don't do that, guys. You want to be making a bigger profit. And then all you've got to do is manage your trade. In other words, move your stop loss up to cost when it's in a decent profit, and then follow your stop loss up behind the price so that you know that you're making some money. Guys, don't forget to join the members area, by the way, where you get a trade of the day every day and a couple of other perks and what have you that are going on there. And also, don't forget to subscribe. If you've watched the video this long, surely you want to subscribe to the channel and watch another video and see me telling you how to trade and that sort of thing. And I'll come out. I'm actually doing a range on charting at the moment. And join us for the live shows on Tuesday and Thursday as well. That's also quite a lot of fun. Guys, get your free Forex book down below as well. There is a free Forex book for you down there as well. I hope that you understand a little bit about strategy and system. I hope this is going to help you in some way or another, and it is going to take you forward into making a profit in the market. Keep your feet on the ground, reach for the sky. I want to thank you for watching. Until the next time, don't forget to watch these last videos. Cheers, ciao, and Bye.